Hey everyone, this is Mike Bond with Hard Money Mike. Today we're going to go over how debt creates wealth and makes you rich. So I want to make sure we're clear. We're talking about the good debt, the debt that creates wealth, that creates income. That's what real estate investing is all based on, is creating wealth with other people's money. You don't have to be rich. You don't have to have a college degree or a PhD. All you need to do is understand how using other people's money creates wealth and income. And the beautiful part about this is it creates real wealth, real income. If you're a flipper, going from making $50,000 to $100,000 to $200,000 in a year and more is very likely and very doable. All you have to understand is what's the good debt and what's the bad debt. So when we're talking about good debt in real estate investing, we're talking about debt that is going to create this wealth, this income. Real estate investing is all about using leverage, using other people's money. It may take a little bit of your money or may not take any of your money. It's all about finding really good properties, undervalued properties, properties that other people just don't want because it's a headache for them, it's too much work for them, and you taking that using the right debt to create this wealth and income. So when I talk about wealth and income, what does that mean in real dollars? Let's look at just a normal flip, someone who's doing 4 to 5 properties a year. And yes, you could get to 4 to 5 properties. It's very easy. And for the people who are focused, it's what they do all the time. So let's take an example. Let's say you have a flip. The ARV, what you're going to sell it for is $300,000. On average, the least you want to make is somewhere between 10 and 15% of the sale price. $300,000 property, let's go in the middle and just say you're making 12% or $36,000. That's the money that's going to go into your pockets. So in this example where there's $36,000 in profits, you do 4 flips a year, that's about $144,000. You do 5, that goes up to $180,000. You're looking at creating this wealth by using other people's money, mostly other people's money. You may have to put in a little bit of your own, just depends on the deal. If you find a good deal, you could still find 100% financing in this market. And just to clarify what a good deal is, that's something that is under 70% all in, maybe 65% all in. Let's keep looking at these numbers just so you can understand where this good debt creates this wealth. Let's look at the numbers behind this deal. Remember, the sale price is $300,000. A typical deal is you're at 75% of that sale price, the ARV, or less. So at 75% on a $300,000 deal, you're all in at $225,000. Let's break that up. Part of that's purchase price. Part of that is the rehab budget. In this case, we're going to go $175,000 for the purchase price, $50,000 for the rehab. Now, with most national lenders, what you're going to find is they're going to require that you put 10% down on the purchase price. And typically, the majority of the time, they're going to finance 100% of that rehab, that $50,000. So what it looks like is you're going to have to put down 10% of the purchase price. In this case, $17,500 will get you into this project. You're going to have to pay some closing costs, some interest. So let's put it all together and say you're into this for $25,000 to $30,000 on each one of these flips. The rest is debt. The rest is other people's money using that leverage to create this wealth. Now, where else can you put in $25,000 to $30,000 and come up with $36,000? And I'm talking about months, not years. Most investors out there who are investing in stocks and bonds, if they get 8%, they're happy. So they're putting in $30,000 and maybe getting $2,400 in a year. You're putting $30,000 using other people's money as leverage, and you're creating $36,000 in this example. Now, this example also says you're going to flip that property in 4 to 5 months. So you could take that money, that $30,000, and use it 2 to 2.5 times. So that $30,000 actually becomes somewhere between $72,000 and $100-some thousand. So you're creating this with a little bit of your money and a lot of leverage or debt from someone else. Taking a little bit of your money, using other people's money and leverage with good debt. Now you've created a business, like I said, if you could do 4 or 5 a year, that's going to be in the 6 figures. That's what you're bringing in. That's what's coming into your life just by using other people's money, using debt, and using it correctly. So we talked about good debt and how it helps you with flips, but maybe you're not into flips, or maybe you want to do some rentals also. And there's a process out there called BRRRR. And if you've ever been to Bigger Pockets or some of the other channels out there, you can find a lot of information, including ours, on BRRRR. What BRRRR is buying properties under market, fixing them up, refinancing and keeping them as rental properties, keeping them in your portfolio. That creates not only wealth because you've created some equity, and we'll go through the numbers, but you're also creating monthly income. So this is more of a long-term play than fix and flips, which are every 4 months you're turning your money. Now, on a really good BRRRR property, you find something that is maybe 70% all in. You find a good property. It's a little bit less you have to put into a rental property as far as rehab. And done right, when you refinance, you can refinance your closing costs, your payments, everything up to that 75 or 80%, depending on the product you're going to use. But let's go through some numbers just to make sure you understand what this looks like and what it means. So you find a property that the market tells you, if it was fixed up and it was for sale, it would sell for $200,000. That's the ARV. But you find a property from a wholesaler or real estate agent that is a really good deal, needs some work, someone wants to get rid of it. That's what real estate investing is all about. Like we said before, finding undervalued properties. You find this property, you're all in at 70%. That means the purchase price. That means the rehab. All of those things, you use other people's money. Use a hard money lender, a private lender to purchase it and rehab it. Now that you've purchased it, fixed it up, and it's rented, now you're going to use another form of debt. That's a long-term debt, your traditional loans, your DSCRs, whatever loan's going to work best for your needs. Well, let's look at that. So you found a property that was undervalued, you fixed it up, you put it into a rental, and you know, at least you should, that it's cash flowing. Every month you're going to get some money. But in this case, we bought it, fixed it up, and we're at 70%. There are some closing costs for both loans, some carry costs. So when you refinance it, you're at 75% of, remember, what the sale price, the market value of $200,000. So you owe $150,000. It's worth $200,000. You just created $50,000 in net worth, in equity, just by using other people's money, using the right debt. You've created income, the monthly income that's coming in after you pay your expenses. You've also created that equity, that gap in there. 50 grand is probably more than most Americans have in their savings or in their retirement. So you've created something from nothing by using the right debt. Now just keep this property, 10 or 15 years. You're paying down your debt, your equity is growing, and the property is going up in value. In real estate investing, as long as you use the right debt, find the right properties, you're going to create wealth. You're going to create income. And that's what it's all about, is getting into debt. It's just getting into the right debt on the right properties. So let's all get into debt. Let's just get into the right debt. Let's create the wealth. Let's create the income. Less credit card debt that's going nowhere, and more debt into an asset like a property that is creating what you want, the lifestyle you want, the income and the wealth you want. If you have a good deal, which is 70% or below the ARV all in, you can reach out to us. You can go to our website, hardmoneymike.com. You can schedule an appointment. We'd be glad to talk to you. Or there's other options out there too. There's finding real OPM, real people's money. It may be for the down payment. It may be for all of it. If you want to find out how to find them, how to attract them, how to keep them, just reach out to us at hardmoneymike.com. Just go to the contact us. There's a calendar there. You can schedule a time. We'd be glad to help you create wealth with the right debt.